Mr. Speaker, I want to yield 5 minutes to the distinguished gentleman from Kentucky who's worked tirelessly to assemble this package of bills that will help our Main Street banks and credit unions thrive, grow, better serve their customers, and in turn, be able to see their local economies benefit. And that's the gentleman from Kentucky, chairman of our Subcommittee on Financial Institutions, Andy Barr.
The gentleman from Kentucky is recognized for 5 minutes.
Thank you, Mr. Speaker, and thank you, Chairman Hill. I want to start by applauding my good friend from Arkansas, Chairman French Hill, for his leadership on this critical legislation. Great work, my friend, great work. And great work for working across the aisle for bipartisan legislation, well-earned bipartisan support for this legislation that will help strengthen Main Street America. The Main Street Capital Access Act is exactly the kind of reform needed to advance this committee's goal of making community banking great again. Over the past 18 months, we've worked hard to develop over 24 banking reform bills, many of them with strong bipartisan support, and combine them into one multifaceted package designed to strengthen our community financial institutions. Not big banks, like the ranking member is referring to, community banks, Main Street banks, mid-sized banks. And if you want to help hold big banks accountable, then what you need is competition. And competition and choice is good for America, good for consumers, and good for financial stability. So I want to first start by, Mr. Speaker, admitting into the record 14 letters of support from the Community Bankers Association, the American Bankers Association, the Bank Policy Institute, the Independent Community Bankers Association of America, the National Association of Home Builders, and others, without objection.
Without objection.
Thank you. And community banks and credit unions are the financial backbone of this country. They finance farms, they finance factories, first-time homebuyers, and the local entrepreneurs who create jobs in every corner of America. These institutions don't just serve communities, they are part of the community. But here's the hard truth. Community banks have suffered under a regulatory framework that forgot who the system should serve. For too long, Washington has been writing rules as if every bank and credit union in America is a trillion-dollar global institution. They are not. They are our hometown banks and community financial institutions. These guardrails that the ranking member talks about rolling back, we're not rolling back guardrails for big multi-trillion-dollar banks. We're talking about small community financial institutions. And the goal is simple. Regulation should follow the risk, not the zip code, not the political fashion. A $500 million community bank in rural Kentucky or rural Arkansas or rural Michigan should not be regulated under the same framework built for a trillion-dollar institution operating around the globe. That means higher costs, fewer loans, more forced consolidation. This hurts everyday Americans by reducing both access to credit and opportunities for small business growth. The Main Street Capital Access Act is about changing that. It is about right-sizing this regulatory framework to ensure that community lenders get back to what they do best, serving their customers and their communities. Main Street opens the door for new bank formation, improving transparency in the chartering process, making applications more predictable, and ensuring rural and underserved communities can once again see new institutions form instead of watching their local banks disappear. You want to hold big banks accountable? Allow new banks to form. It also restores proportionality to regulation, updating capital leverage and enhanced prudential standards so they actually reflect a bank's risk profile, not just an arbitrary static asset threshold. That means less money spent on regulatory gymnastics and more money available for loans in your communities. We are also bringing fairness and due process back to the supervision process. Banks and credit unions should not be governed by opaque examiner preferences. They should be governed by clear, risk-based, and transparent standards that focus on core financial performance rather than foot faults and check-the-box compliance. Main Street also addresses the structural problems that are driving consolidation. This legislation requires regulators to ensure clarity and predictability in the merger process so that healthy banks can grow and troubled banks can find partners before they fail. And it ensures that when banks do fail, like Silicon Valley Bank, community banks aren't shut out of the resolution process by design. Finally, this legislation recognizes reality. Innovation is happening. The question is whether it happens inside the banking system where it's supervised and safe or outside where it isn't. This bill lets banks partner, modernize, and compete. Community banks, Mr. Speaker, are the financial infrastructure of America. Rural America, suburban America, urban America. When they thrive, small towns thrive, and when they're regulated out of existence, capital dries up and opportunity for local ownership disappears. The Main Street Capital Access Act is a critical step toward restoring the financial backbone of this country. I urge all my colleagues to support this legislation. I yield back.
The gentleman yields back. The gentleman from Arkansas reserves. The gentlewoman from California.